We got to talk about what home sales did in the Denver metro market that they haven't done in over a year. Hey, it's Sean Reddy, Keller Williams Reddy Group, and welcome to our Denver metro market in a minute. Full disclosure, we're going to go longer than a minute. It's just a catchy title. Yet each month we bring you the month over month and year over year statistics and health metrics of the Denver real estate market, the metro market, 7-county area, so that you know what's going on, you know what the trends are. And if you do plan on entering the market, either you're buying a home, selling a home, doing both at the same time, then you may know when the right time for you to jump into the market might be based on these reports. So let's get right into it. Like I said, we look at month over month, we look at year over year. Got some graphs to show you as well. This is the first time doing this visually, where you're actually seeing the screen that I'm reading off of when I'm making these videos. Hope that's helpful for my visual learners out there. I know I'm one, so I figured it'd be cool to at least give it a whirl. All right, so I already teased this. Home sales did something in March that they haven't done since February of 2024, and that's jump by more than 30%, at least in terms of pending sales. So pending contracts are up 31%. Month over month. You'd have to go all the way back to February to see an increase that high. I'll show you what that looks like on a graph, a longer runway graph. But that is a huge jump to nearly 5,000 purchase contracts in the 7-county area just last month. By the way, I am recording this on April 1st. It's the first available day that we have this data to show you. So hot off the presses, and let's keep going. So I want to point out the colors real quickly. When I'm color coding this, the greens mean indicators that are moving towards seller's market, the red indicators that are moving towards buyer's market, the yellow is just the exact same from the previous month. All right, so let's stick with the green categories for now. You see these first two lines here, both average and median days on market fell by 24% each in March, going from 51 average days to 39, 21 median days to 16. Now that measures between when a home is listed and when it goes to contract, specifically for those homes that went under contract in March, which again, 5,000 of them did, so pretty good sample size. Closed sales also jumped up by 34%. Kind of saw that coming with the last couple months increase in purchase contracts. You can see that's 3 straight months of new purchase contracts, 2 straight months of increase in closed sales. So closed sales jumped up 34%. And lastly, in the green column, moving towards seller's market, the average selling price, I know it says 0%. I don't have any decimals there, but it did go up by $800. But up is up. So the average selling price of what closed in March compared to what closed in February is up a few bucks. The median price remained exactly the same. That's the only yellow category that we're looking at. And then for the reds, the metrics that move us closer to buyer's market territory, new listings, of course, up as we expect this time of year. Big jump, 31% increase in new listings for the third straight monthly increase. And then home availability jumped up for also the third straight month, up 15%. As of today, there were 10,706 homes on the market. One more red category here, and that's the median sold price to list price ratio, which does measure the relationship between closing prices and final asking prices. That number dropped by 0.17%, not a big drop, but down nonetheless. So let's put a little perspective on this in a couple ways. Next, I'm going to show you what the year-over-year trends look like, or what the year-over-year stats look like. Zoom in a little bit here. And first thing you probably notice is that it's all red. So while there's a lot of green, a lot of trends moving in favor of sellers month over month, the year-over-year trends, not so kind. So first, it takes longer to sell a home. The median days on market up 46%. New listings are up significantly, 27% year over year. By the way, this is measuring what was listed in March of last year versus March of this year. Available homes up 61%. So closed sales, while up 34% month over month, down 0.3% year over year. Get this, the average and median selling price, both up one's the same month over, the median same month over month, the average is slightly up, but both year over year are down. Now, it's not too common that we see a full year's worth of, I don't want to call it appreciation because it's kind of flatlined, but year over year prices being down. Now, does that necessarily mean that values across the board are down 0.3 or 0.8%? No, not necessarily. It only measures the 3,600 plus homes that closed in those given months. Yet you can see long term, we typically do see greens in those cells there. So prices are down. Median selling price to list price is also down. So why do these favor buyers? Fairly self-explanatory, but longer selling times, if you're a buyer, of course means you have longer to make a decision. You can feel less pressured. You probably have less competition on your heels, and you have more negotiating power when it comes to making offers. I'll say across the board, not every property, of course, but across the board, that bodes well for you as a buyer in terms of negotiating a better contract or better price or terms for you. New listings, of course, gives you more option, also more leverage when making an offer, as does available homes, because you have homes that you can reference that are comparable, that are on the market when you're making an offer. Closed sales, again, means less competition. And of course, price. As a buyer, you want to see prices come down. Now, the sole green cell here is purchase contracts jumping up 7.6% year over year. I think it's fairly safe to say that we're starting to see that lock-in effect, the interest rate lock-in effect that's been so pronounced over the last several years, maybe subsiding a little bit because new listings are up, purchase contracts are up, more people are entering the market both in selling and buying. All right, last thing I mentioned, we're going to take a quick look at these graphs here just to get some perspective long term. So this is days on market. Blue is average, red is median. You definitely see those pronounced waves that happen this time of, let me get down to the months. This time of year, those numbers go way down compared to in the winter months. So we're definitely seeing that trend continue. By the way, these go all the way back to August of 2022 when I started keeping these records. This graph measures the relationship between new listings, available homes, so total inventory, and new purchase contracts. And what we're seeing here is look at the purchase contracts at 4950, or sorry, new purchase contracts 4961 in March. You'd have to go all the way back to August. Didn't notice this until just now. You have to go all the way back until August of 2022 when I first started keeping these to see as many purchase contracts in the Denver metro market in any given month as there were last month in March, which is pretty astounding. But also to go along with that, check out the inventory curve. So inventory peaked out, at least on this framing, sometime around August, September of last year, dropped down significantly into the end of the year with 7,300 homes on the market and has been climbing ever since. So even though you have this rise in purchase contracts, this blue line here, this is the rise in new listings, float this inventory number way back up. So it'll be interesting to see how this plays out. You definitely can see the correlation in the waves between peaks and valleys in all three of these, but we'll see which one rises the fastest. Closed sales. So closed sales on par with early fall last year. And then if we compare it to same month last year in March, it's kind of right there. We already saw that. So we're seeing this closed sale rise, which should continue through the spring months and then start to taper off like it usually does, barring any significant movement in interest rates in the back half of the year, which we'll see. And then average and median selling price. Blue is average, red is median. You can see a lot. Basically, I mean, there was a good rise between January of 23 and then going into like the middle of 2023. Then the prices started falling off, rose back again in spring of 24. Didn't fall as far, but they did fall nonetheless. So it's kind of this like, it's not a straight line up or down. It's just this kind of roller coaster because it measures closed sales in 1 month increments. Those plots on the graph are going to vary, up or down, but there's not really a trend in any one direction here, up or down in terms of selling prices. And then median sold price to list price is the last one here. You can see it's been since spring, looks like May of 2024 when we last saw the median selling price higher than the median asking price. We started getting a little close in February and then it dropped back down a little bit, like I already mentioned. We'll see how that plays out. But again, that is the relationship between last asking price before a home goes under contract to what the home ultimately closes for. Now, caveat here, it does not take into effect any sort of seller funded credits or anything like that. If there's, credits that come up in inspection or anything like that, it just measures the gross price. So I want to make that distinction very, very clear. All right, so tons of data here. What does it all mean? In the short term, month over month, more trends are favoring sellers, but you look at a longer time horizon and we're comparing year over year, there's more trends that are favoring buyers. What to make of it? Is it a buyer's market? Is it a seller's market? Is it neutral? Technically, a seller's market is defined by less than 4 months worth of supply on the market, which it is less than that. So by definition, it's a seller's market. Yet if you're buying a home, let's say you're buying a home independently of selling a home, you're just looking at some of these trends that are favoring you as a buyer, and you're kind of licking your chops with the amount of inventory that's out there and trending higher and higher every single month. There are deals to be made if you're a buyer. If you're a seller, there's still ample opportunity there's always ample opportunity to get top dollar in any given market. Yet there's some sub-markets in this greater 7-county region that are performing much better than others. And by the way, if you want data like this in your specific market, in your town, in your neighborhood, whatever, drop a comment. Love making these videos, happy to do it. I'm an educator first and a consultant second before I'm even thinking about being in sales. That's how I approach my business. And if you like that sort of approach and you feel like we would work well together, I'd love to hear from you. Love to be a resource for you. I appreciate you watching, and we'll see you next month in this segment. Take care.